Hey everybody, one of my favorite companies and one of my biggest investments is a home builder called Dream Finders Homes. They recently reported earnings. The stock went down after earnings. I want to talk about it. Before we dive in, take a look at the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now. It's the best way to support this work I'm doing on my YouTube channel. Again, that is fool.com/Frankel. So if you're not familiar, let me just quickly go through what Dream Finders does. Obviously, they are a home builder, but there's a little bit more to know about them than that. They are a home builder that operates in mostly the Sunbelt markets. They're based in Jacksonville, and you can see the map on your screen right here in the corner. They also have a big presence in Orlando. They're in Georgia. They're in the Carolinas. They're in the DC metro area. They're in Nashville. They're in Texas in a few different markets. They're in Denver. So the general takeaway is that these are markets that, number one, have positive net migration. 71% of U.S. net migration is into these states you see that are in color right there. Those are states that Dreamfinders operates in. They're also states that generally have above average job and wage growth. So really attractive markets. And this is a relative term these days. There are still places where homes are relatively affordable. Obviously, housing is up significantly across the country, so that's why I say it's a relative term. But if you're trying to buy your first home, it's a lot easier to do it in one of these states than, say, California. So attractive housing markets. And if we look here, Dreamfinder specializes in mainly entry level homes and what they call first move up homes. The first two categories you see on that screen make up the bulk of the business. And that is really significant because there's a big shortage in those. There's a lot of pent up demand. Right now, home ownership is not that affordable for first timers, if we're being totally honest. Not because of these sale prices you see right here necessarily, but because mortgage rates are 7% or higher. And it's really tough for people to afford the monthly payments. It's not just that price tag. Um, so there's a lot of pent up demand. Experts estimate the housing shortage in the U.S. is several million homes to meet the demand. Now, obviously, it's not going to happen overnight, but if a combination of the right things happen, mortgage rates go down in the next few years, which most people are expecting. Um, it could be a really good time to be someone who offers entry level housing because there is a lot of demand for it in the market right now. But Dreamfinders are a relatively young home builder. You can see they were founded in 2008, and they've grown really rapidly, especially in the past few years. In 2019, they closed just over 2,000 homes. 2023, they closed over 7,300 homes. They're expecting about 8,250 this year. A lot of their growth was from acquisitions, but a lot of it is organic as well. The product is gets excellent reviews, especially compared to some of the other big home builders in the market. So I want to go over some of the numbers from the first quarter, and we'll talk about why the stock went down. So I mentioned the business is growing pretty fast. Home building revenues grew by about 8% year over year in the first quarter to 825 million. You can just see right here the 2023 to 2022 comparisons on your screen. And then this is just in the first quarter alone in 2024. Home closings, 1,655. That was up by 9% year over year. New orders are a big thing to notice here. Dreamfinders had over 1,700 new orders. That was up 19% year over year from the first quarter of 2023. And the average sale price is up by about 1%. You can see the average sales price here. It's about $495,000 for a home and that combines the first entry level, move up, and all the other homes that they offer. At the end of the first quarter, they had a backlog of over 4,500 homes. And as you can see down here, that is significantly up from the end of 2023. That backlog represents $2.3 billion in revenue. And you can see just based on how many homes they closed in the first quarter, that should keep that backlog alone, not including any new sales, will keep them busy for some time. So on the surface, the numbers look good. Now, why is the stock down? Well, for one thing, they missed expectations on both the top and the bottom lines. They're a very profitable company. They earned 55 cents per share in the first quarter. Net income was up 11% year over year, but both revenue and net income increased by less than analysts had expected. This was the first quarter in a long time. It might have been the first since Dreamfinders has been a public company where they missed expectations on both the top and bottom lines. So in stocks, when you have a company that has that kind of streak, um, one bad quarter can really cause it to take a hit. The stock's down, roughly 15% since the earnings announcement. The uncertain interest environment is clearly weighing on the company, both results and the stock price wise. We've seen interest rates kind of spike so far, excuse me, in 2024. This was the first bad quarter in a while. It wasn't just a miss on the top and bottom line. This is the first quarter I can remember where Dreamfinders didn't raise its guidance for the full year or initiate new full year guidance at a higher number than investors would have thought. So really, it was just priced for continued great results. This was a good quarter. It wasn't a great one, and the stock is paying the price for that. Looking ahead, though, I think that this could still be a great stock to buy. It's one of my largest investments, and I like this business so much I would even add to it, even though it's my largest position. Or not my largest. It's a top 5 position in my portfolio, but I would still add shares at these levels. It trades for less than 10 times forward earnings estimates right now. Um, that's the plunge helped out the valuation quite a bit. I mentioned the kind of great demographic trends in the markets where they operate. Positive net migration. It's really kind of impressive that almost 3/4 of net migration in the U.S. goes into the states where they operate because they don't operate in that many states. They're, I think, the 14th largest home builder or thereabouts right now. Um, they're not one of the biggest. They use a land light model, which I'm going to put on the screen also right now. A land light model, there's one other company that does this, and it's a home builder called NVR. So basically, what Dreamfinders does, unlike most home builders will buy a big plot of land, gradually turn it into a neighborhood, turn it into building lots, and over time sell off those lots to buyers. Dreamfinders buys kind of like option contracts on land, where it doesn't actually buy any land until it's ready to build a house on it. So that creates a lot of financial flexibility. It gives them the ability to walk away at a minimal loss in really tough times. And you can see this right here. The dark line is the home builder peer group average. This is a chart of their the net profit margin of home builders. So in the 2008, 2009, when the foreclosure crisis was happening in America, home builder prices plunged. NVR, which we have to use NVR because Dreamfinders wasn't a public company back then, they remained profitable. Their profit margin certainly dipped into like the 5% range for a few years, but they remained a profitable company. And you can see it's just a lot more consistent than this kind of jagged line down here. So it also lets them generate better returns on assets than peers and things like that. Landlight is a great model. If you ever want to see a really impressive stock chart, look at NVR since it went public in 1993. You see, so this is NVR since they went public in 1993. And I'm not saying Dreamfinders is going to do the same exact thing. Obviously, if we knew what stocks were going to go up by 75,000% in 30 years, we would all just buy them. But this is kind of the power of a great capital allocation model over time. So, I mean, a lot of people became millionaires off NVR stock, and Dreamfinders has admittedly, I mean, the CEO has acknowledged that they've modeled the business after NVR just because of its success. So this is like NVR in a much earlier stage of the business cycle and in some very attractive housing markets. So it's one that I really like. I think it's going to be a big part of the solution to the U.S. housing shortage and that's a long-term tailwind. So I'm really excited to see this one play out over the next decade or so. Love to hear what you think about Dreamfinders results and just what you think of the business in general. I'll do my best to respond to every comment individually. Thanks for listening, and I will see you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.